Good evening, everyone. I'm Brian Trumbore with your nightly review for Monday, April 15. It's 4:02 Eastern Time. And of course the news isn't good, so bear with me as I have CNBC on in the coverage of the explosions at the Boston Marathon. My mantra for the 14 years I've been doing stocks and news is wait 24 hours, but we'll see. Doesn't look real good right now. So the market reacted. The market was already having a terrible day. It was down about 150 points. It closed down 265 to 14,599, or down 1.8%. S&P 500 lost 36 points, 2.3%, and NASDAQ lost 78 points, 2.4%. So needless to say, we're not talking about all-time highs anymore. Gold closed at $1,362, down $139. The two-day drop in gold is roughly 14%, the worst two-day percentage decline since January of 1980. Oil finished down $3 to $88.14. 10-year Treasury caught a little bid, 1.69%. Tokyo down 1.5%, Shanghai down 1.1%. London, Paris, and Frankfurt were all down 0.5 to 0.8%, but for all of those markets, they closed before this news hit. Okay, on the issue of gold, some are saying as the growth outlook improves, demand for safe haven assets will contract. But I think the global growth story is still very punk, and certainly the growth figure out of China today wasn't great, wasn't awful, it wasn't good, and China has been the key to the surge in commodities until the past year or so. More importantly, I think, was the announcement last Friday that Cyprus would be selling some of their gold reserves, if this is approved, as part of the funding that is tied to their bailout package. And that leads some to wonder if other Euro central banks will sell some of their reserves, and understand that Cyprus has about 13.9 tons of gold in their reserves, and the story is they might sell 10 of the 13.9, but it's in my Week in Review column. Italy's central bank has over 2,400 tons, so 13.9 for Cyprus, 2,400 plus for Italy, 380 or thereabouts in Portugal. So you can see the potential is there if the central banks felt like they had to sell some gold. But on the other hand, I don't think the central banks would allow a spectacular rout to continue. I'll obviously have more on that tomorrow. In Europe, exports in the Eurozone rose 0.1% in February over January. Imports decreased 2.1%. German exports rose 2% February over January. France rose 1.9% February over January. Don't read too much into the figures. The exports from Italy declined 4.8%. That is significant. Netherlands saw its exports decline 1.1% and Spain's fell 0.4%. In China, so the first quarter GDP came in at 7.7%. The market was expecting 8.0. The 7.7 is significant from the standpoint that it is down from the 7.9% in the fourth quarter. And China grew at 7.8 for all of 2012. Industrial production in China for the month of March was up 8.9%, but that was less than expected. March retail sales in China rose 12.6%. That was in the line. Just one item back in the States. Confidence among U.S. home builders unexpectedly fell in April, and that's now a third month in a row where confidence has declined. Citigroup reported pretty solid earnings, but this week we're going to see more reports from the likes of Goldman Sachs, Yahoo, Johnson & Johnson, Intel, Google, IBM, Microsoft, GE, and McDonald's. Okay, back to China. Alistair Thornton, who's been getting a lot of press recently, senior economist at IHS. I believe that's IHS Global Insight. Said, "We have lost confidence in a robust recovery, another year of propped up growth via state spending and a credit deluge would, we fear, push China dangerously close to proving Wen Jiabao, the former premier, correct that the current economic model is unsustainable." Thornton goes on to say, while August 2012 proved the bottom for last year's downturn, we doubt March will be the turning point for 2013, given macro policy has shifted to a tighter stance with renewed controls on the housing market, local government financing vehicles, and wealth management products. Confirming the sluggish activity in China's industrial sector, electricity consumption rose by just 4.3% in the first quarter, much slower than the 6.8% seen in the same period last year. That's significant. Turning to Greece, the troika of international creditors, the European Commission, the European Central Bank, and the International Monetary Fund, said the country's economy will start growing again next year and it will be able to contain its debts. Greek debt is currently 160% of the country's GDP. I hope they contain it. Eurozone countries could soon approve the release of 8.8 billion euro, or about $11.5 billion. Remember, Greece has already received 270 billion euro in bailouts since 2010. Of immediate concern is a tranche of 2.8 billion euro that Greece thought it was receiving last month. Greece has been trying to strengthen its banks, recapitalizing them with 50 billion euros so that they'd be in a position to start lending again. In the latest Brookings Institution Financial Times Tracking Index, looking at the global economy, overall indicators of growth have hardly budged since mid-2011. what they call the Tiger Index, shows the global economy unable to achieve liftoff and facing the risk of stalling, according to Professor Eswar Prasad, a senior fellow at the Brookings Institution. He added, "The best that can be said about the weak pace of economic activity is that it has bottomed out in some key economies." The group of 20 finance ministers is meeting this week, this Thursday. A draft statement has already been released from the European Commission, and it says in part, "The euro area has made further progress in the implementation of its comprehensive crisis response strategy. The euro bloc expects a mild recovery setting in toward mid-2013 and strengthening in the second half of 2013 and in 2014. Hardly." Of course, that message conflicts with the European Commission's own forecast that the Eurozone economy will shrink 0.3% this year. And depending on what the genesis of the incident at the finish line of the Boston Marathon today, that could have something to say with what takes place in Europe. In Japan, very interesting comments from Takeshi Fujimaki, a former advisor to billionaire investor George Soros. This was in an interview with Bloomberg, I believe. At least Bloomberg is reporting this. So this fellow Fujimaki is an expert, to say the least, on Japan. He says the Bank of Japan's huge bet by boosting quantitative easing won't turn the economy around and is instead sending the nation toward default. By expanding the monetary base to 270 trillion yen, the Bank of Japan is making a huge bet, which I think it will ultimately lose, said Fujimaki. Governor Kuroda, the governor of the Bank of Japan, Kuroda's QE announcement is declaring double suicide with the government. The BOJ will have to share the country's fate and default together. Fujimaki said Japan's finance is sinking into the ocean. There's no escape from a market crash in the future when you have such enormous debt. Things may look rosy for now as stocks rise, and it's been a spectacular rally, as you know. But should we see hyperinflation, Japanese government bonds will see a huge sell-off leading to a stock market crash. Finally, in Venezuela, Nicolas Maduro, Hugo Chavez' hand-picked successor, won a surprisingly close election for president, supposedly taking 50.7% of the vote against 49.1% for the opposition candidate Enrique Capriles. Capriles last October had lost to Chavez by 10 points. Capriles is asking for a recount and at least an audit of the vote, and we'll see what happens there. Maduro is supposed to be sworn in on April 19, and then he would serve until January of 2019, which would complete the 6-year term that Chavez would have begun in January. You know, I mentioned Britain, Margaret Thatcher. Her funeral is Wednesday, and I was going to be talking about it. I will maybe more tomorrow. You talk about a tension convention when it comes to the security threats surrounding the procession. I would not want to be in that part of London on Wednesday. If I'll leave it at that. We'll discuss it more tomorrow. Sorry for this disjointed report. I hope you understand. There is a lot of breaking news, and we'll cover it tomorrow. Take care.